Hi, so in this video, we're going to show you how to create a trade journal. This is going to be really targeted at any beginning trader. I'm Dustin from Bootleg Macro. This is going to be the outcome of what we do here when we set up our simple trade journal. What we're going to be looking at is essentially the format of how you're going to want to go ahead and set up a trade journal so that you can start tracking your trades historically, start improving as a trader, start seeing where you make mistakes, and hopefully save yourself a bunch of money. Because remember, there are no people in the market who are immune to blowing up an account. I mean, we have Bill Wong, who at one point lost $20 billion and was worth $20 billion until one day he wasn't. We have Melvin Capital during the GameStop debacle where they were down at 1.6.8 billion in just 90 days. Everyone has the risk of blowing up. So you better pay attention if you're not doing it yet for your account and you're already starting to lose money. One of the things that you probably need to start paying attention to is what are your recurring mistakes. The only way to do that is to use a trade journal, to review your historical trades, to sit down when the market is closed and to look at the type of decisions that you were making, understand what the market levels were, understand how the market reacted, what was your thesis, where were you wrong, where were you right. This is the only way that you can get better as an individual trader, is to essentially give yourself the equivalent of batting practice. And doing historical review of your trades, that is batting practice as a trader. It lets you review the market, it lets you think about how the market was moving, how it was responding, what type of signals you should have been paying attention to. As we start to break into creating this trade journal, the number one thing that you're going to need, the starting inventory, is going to be a spreadsheet. The first thing that we're going to do is we're actually going to set up the columns that we're going to have across the top. We're going to have the date, we're going to need the ticker, something that will be a little bit different that you may not pay attention to, but most traders should when they're, especially when they're thinking about their position sizing, is you want to have a risk amount, whatever amount you're willing to risk in each individual trade. You're going to need to track your purchase price, what you actually paid. You're going to have to pay attention to what is the current price of the individual stock. Only change here from what most people would be tracking is we're going to look at what is the average true range, and I'm going to call it the ATR. If you don't know about the ATR was invented by Wells Wilder. I believe he has a book called New Technical Resources or New Technical Measures or Indicators. That book also is going to explain to you essentially how to be able to calculate it. If you don't care about calculating it, you can always go over to any of the stock charting applications online, and you can see here on stock charts, it does have average true range. You can set whatever amount of time. A lot of people do 14. I'm just using 17 for fun, but go ahead and check that out if you've never heard of average true range. Now we're going to take a look at what the stop is going to be. We're going to look at the position size. It's going to be the amount of money and the size that it's going to be. And then we're going to have the share. We're going to do all this because essentially what we're going to be able to do is enter in a ticker and a risk amount. And then as long as we get the current price and the ATR, it's going to give us our stop, position size, and share count. We're going to do a little bit of formatting just to make it a little bit cleaner. Do a little red here, a little yellow here. The first thing that we're going to want to do, if we're just going to do an example here, is look at a specific stock. We'll just pretend we're looking at Tesla. I'm going to go over to Tesla quickly, see that the close was 207. The current price and the purchase price are that. I'm going to say we're going to risk $100. What is the ATR? We'll go ahead and look. The ATR is 9.414. Now what we're going to do is we're going to be able to use the specific ATR and the stop to be able to be generated. So we're going to do equals. It is going to be whatever your purchase price was minus your ATR times some integer. You can pick whatever you want. I think some people, I don't know what the Fibonacci number is. Maybe that's close. This would give us a stop here for at 191 off of the volatility that we're seeing on Tesla. If we were going to go long, go ahead and let's format these quick. So now that I have them formatted, what we can do now is essentially do what our position size is going to be. The first thing we want to do before we even do the position size, though, is going to be the share count. It's going to be the easiest thing because we will have this. We'll have the amount that we are risking minus the purchase price minus the stop price. So this is going to tell us the distance in between our stop price and our purchase price, and then what our risk amount could be divided into it. So it's going to give us 6 shares. We're doing $100. I'm going to make sure and remove the decimal places so it rounds up automatically. Now we can use our position size. Just going to be the share count times the purchase price. So you'd have $1,300 inside of Tesla. We'll put the date. Today is 4/1/2023. And that's essentially it. The only difference that we would have for everything else is that for these additional rows now, I would want to put 0 just so that I am ready to add any new data that I might want to look at. Let's go ahead and just show you how it looks if we were going to do, so if I was going to do the SPY, we have 6.148. Price is 409.39. So we'd be able to have a position size of about $4,000, 10 shares. The stop, it looks like, is going to be at 399. And that's essentially how we'd be thinking about how to do this. So now I'll take a quick look at the Qs. It looks like Qs, the close is 320.93. And then the ATR is 5.9. 915. That gives us 10 shares. We'd have a position about $3,200, and we can see that the stop would be at about $311 currently. So this is the really easy way to understand how to make a trade journal if you're going to use it off of volatility-based position sizing. A lot of folks are going to use levels, so I'm going to go ahead and create a different sheet here. I'm going to take these same columns, and on this second sheet, I'm going to go ahead and paste it. The one thing that I'm going to remove is actually the ATR because I don't need it. This entire column is useless if you are not worried about the ATR. So I'm going to go ahead and bring this down. We'll delete all this again. Just want to keep the formatting. The only real difference that we're going to have here is going to end up being that the way that we calculate our stop. The stop here is going to be based off of a level. So this is going to be for traders who want to use a specific price and allow the levels to determine their position sizing as well as how much money they would put there in the stock. So the first thing that we're going to do is actually create the share account. The share account is going to make it easy because essentially how we're going to think about it is that it's going to be the distance between the current price and the stop price divided by the amount of money at risk. We're going to have this is going to divide against the current price minus what will be the stop, and that will give us what our share count is. So let's imagine looking at the Qs, it is 320.93. And let's say when we look at this specific stock, we want to put a stop here at like 305. Let's use any general number. So now we see that we have a share count, which is going to be reflective of the difference between the stop and how much money we have at risk. It looks like we're going to have 6 shares. And now we know based off of the share count and how large our position is going to be. We'll go ahead and remove these decimal places. Each of these is going to end up turning into money because this is how much money we have at risk. Qs, it is 4123. So this is going to be how you set up your levels as well. I'll go ahead and pull this down. Now we have essentially a clean palette. We'll go ahead and take a look at what like Tesla would look like here. So if we were looking at Tesla, because we know that we just did it on the previous one, we were talking about 207.46. This is actually good so you can understand how how it might move. Let's say we wanted to look at Tesla and we were going to say that we were going to put a stop here at 175. Now we can see that we'd have a position of $638.82. Share count would be 3, and you'd be risking $100. So if it hit that stop, you could sell, and it would be a loss of $100. This is really the ease of how to be able to use a trade journal. But the most important part of it, and for every beginning trader, is going to be that it's going to give you the ability to review your historical trades, learn from the past, as well as essentially do batting practice for you to be able to get reps of looking at patterns that are constantly reappearing inside of the market. Overall, this is going to be one of the easiest ways to improve your trading and go from probably a losing trader to at least a break-even trader. After that, you can start to focus on what specific setups and what probabilities you want to be able to use to be able to get to become a profitable trader. So now what I'm going to do is actually clean this up just a little bit. I'm going to make it so it's easier to use. I use something very similar to this, and I need it for long term to be able to know which tabs I'm looking at. So this is going to be the volatility stop sheet, and then this is going to be the level stop sheet. So you really want to be able to break it down for if you want to manage a position in maybe different accounts of how you want to necessarily do it. Once you have this all set up, now you can start to actually pay attention to what your historical things are. You could do like a note section if you wanted. So what we're going to do is just update the name. We can just call it trade journal. If you want essentially what your formatting looks like to make it a little bit easier and cleaner to read, go ahead and do it on the volatility stop side too. Make it a little bit easier to read. You can do bolding, things like that. The question I have for you, since I set this up this way, can you think about how to be able to do this for shorting? I've only shown you the way to be able to do it for going long so far, but try to show me in the comments below, how would you go about creating this so that it would actually allow you to generate positions taking a short position? But just tell me what you think in the comments below. This has been a weekly update from Bootleg Macro. Have a great day.